As the Bitcoin community eagerly anticipates the approaching Bitcoin halving, several pivotal events and shifts are on the horizon, set to shape the future of the cryptocurrency space. The Bitcoin halving is often described as a digital gold rush and occurs roughly every 4 years. During this event, the supply of new Bitcoins mined per block is reduced by half, which has historically had a significant impact on the Bitcoin ecosystem. Meanwhile, the introduction of a Bitcoin spot ETF is highly anticipated by investors and enthusiasts alike. A Bitcoin spot ETF would provide a regulated and accessible gateway for traditional investors to enter the cryptocurrency market, potentially bringing an influx of capital. As the lines between Wall Street and the decentralized world of Bitcoin gradually blur, we find ourselves on the cusp of a financial evolution that promises to be nothing short of monumental. While the Bitcoin price has seen bearish trends, the convergence of some significant events is poised to reshape its trajectory. One individual who saw this vision back in 2020 and doubled down several times is Michael Saylor, the CEO of MicroStrategy. It seems that Wall Street is finally paying attention to his insights, and this shift may hold the key to Bitcoin's future. Michael Saylor recently shared his insights on the Bitcoin landscape as the halving event draws near. His perspective is painting a compelling picture of Wall Street's imminent venture into the world of Bitcoin. Bitcoin's impact on Wall Street.
I think that from the years 2020 to 2024, that was the great transition of Bitcoin from being a retail asset in the crypto ecosystem, offshore, unregulated, poorly understood, the Wild West. And by the end of 2024, it will have emerged as an institutional asset in the mainstream financial ecosystems on Wall Street. Bitcoin's coming to Wall Street. Coming out of 2024, Bitcoin is emerging as an institutional grade asset, and it's not going to be competing with the Bitcoin forks or other proof of work coins, or Sam Bankman-Fried's favorite yo-yo token, but it's or apes or cats or crazy crypto things. It won't be thought of as that. It's going to be competing against owning a block of real estate in London, or owning New York, or owning a ton of gold, or owning a building, or perhaps owning $1 billion of the S&P index, or owning 1 million shares of Apple stock. And so definitely nobody thought that in 2019 or 2020. But if Bitcoin's going to grow up, right? Bitcoin's on a path to go from nothing to 500 billion to 10 trillion to 100 trillion dollars to 200 trillion. At some point, it should be 10, 20, 30% of all of the wealth in the world. If it's going to grow up like that, then it's inevitable that it had to be embraced and was going to be embraced by Wall Street.
Is Bitcoin a commodity?
I think the most important thing that's happened in the past 24 months is that Bitcoin has emerged as a legitimate institutional grade asset and as a legitimate ethical commodity. And if you roll the clock back to 2019, there are a lot of people that weren't sure, is it a commodity? Is it a security? Is it legitimate? Is it going away? Is it not going away? To be established as a legitimate institutional asset, it must be a commodity. Because if it's a security, it's an unregistered security. So an unregistered security is not an institutional grade asset. No legitimate investor on Wall Street, no one who is a custodian or a trustee of someone else's money can buy an unregistered security. It just can't happen. So what you have is a question, is Bitcoin a commodity or not? That has been resolved over the past 24 months via the endorsement of 2 heads of the SEC, Jay Clayton and Gary Gensler, the head of the CFTC, Rostin Benham. It has been underscored by speeches by the head of the EU Central Bank, the head of the US Central Bank, the head of the Treasury, Janet Yellen. It's been implied, if not stated, in statements by the White House. It has been endorsed by leading Republican candidates like Ron DeSantis and leading Democratic candidates like Robert Kennedy. It has been endorsed and underscored by senators like Cynthia Lummis and Ted Cruz, and by Congress people like Tom Emmer, right? Like Patrick McHenry. And it has been acknowledged by a nonstop parade of money managers. Last week, Mohammed El-Arian pointed out that it's not going away. It has been acknowledged by Larry Fink on CNBC, on Fox. It has been acknowledged by any number of journalists on CNBC, on Fox, on Bloomberg. If you roll the clock back to, I guess, Tesla Day or Elon Musk Day, when Elon announced that he bought Bitcoin, the day before, everybody in the crypto community and the Bitcoin community lamented the fact that mainstream media never wrote about us. Right? It wasn't that long ago, 2020, there was no mainstream coverage. And then all of a sudden, there was an avalanche of coverage. So the fact that Bitcoin is on the front page of the Wall Street Journal, the New York Times, Bloomberg, it's on television, right? And it is acknowledged as an asset class not going away. That's probably the greatest achievement of the past 24 months.
Bitcoin's potential for mass adoption.
I think that there are really three milestones we need for massive adoption of Bitcoin by governments, by thousands of companies, by all of the investors in the world. The first and the most important one, the one that's going to dominate this cycle, is going to be the spot ETF. Because futures ETFs are just literally defective, right? If I said I'm going to charge you a 10% fee per year to invest your money, like your money's gone in 7 years, right? I'm just taking it all, right? So that makes no sense. And so if we want mass adoption, we have to solve the problem of custody, and then we have to solve the problem of compliance. The next step will be gold funds that own a bunch of gold will sell half their gold and buy Bitcoin with it. And then hedge funds that have no Bitcoin will allocate 1%, and then 5%, and then 10%. And then companies that have no Bitcoin will allocate 5%, then 10%. And you don't, there's this joke, right? Maybe it's Einstein said it. The reason we need time is so that everything doesn't happen all at once. So it's, you might be frustrated it's not happening too fast, but you don't want it to happen too fast, right? If it happened too fast, Bitcoin would go to, if I said to you, guess what? Everybody watched Michael Saylor's talk and everybody on Wall Street agrees with him. And so they all bought Bitcoin. Tomorrow morning, you would wake up and Bitcoin would be $8 million a coin. And what would you think? You would think, dang, I should have bought more when I wish it didn't happen so fast. You don't want it to happen that fast. Right now, we're in this very ideal situation. We'll remember this time period fondly. We'll look back at this. Bitcoin trading at 26,000. We all know what's about to happen. We all know corporations are going to adopt it. Wall Street's going to adopt it. We know the ETFs are coming. We know the capital is coming. We know everyone's going to wake up and figure this out, but they don't have the ability to buy it yet. So you know the future, but it has not manifested itself.
Bitcoin scam. We have
crossed the Rubicon. We have crossed the event horizon. Before COVID, before 2020, there were lots of questions about would Bitcoin be adopted by Wall Street? Would Bitcoin be adopted by the United States? Would Bitcoin be embraced as an asset class by the mainstream? A lot of milestones took place to take us to where we are today. The COVID crisis was pivotal. If there was no COVID, I never would have bought Bitcoin. MicroStrategy would not be involved in Bitcoin. No, we would not have been allowed to even consider it. So COVID catapulted us into the space, and following us, we saw dozens of publicly traded Bitcoin miners catapulted into the marketplace when Wall Street caught fire. And then we saw the entrance of Square, Cash App, now Block, PayPal. We saw the embrace, first the challenge of the accounting treatment. No one was concerned about the problem of Bitcoin accounting when there were no publicly traded companies with Bitcoin. So it became notable when public companies entered the space, and within 36 months, we had the accounting community embracing Bitcoin. So I'm not worried about Bitcoin anymore. You shouldn't worry about Bitcoin, right? People that are launching these spot ETFs, they're not worried about Bitcoin. They're not trying to change Bitcoin. They've only got one question on their mind, which is, how do I make sure that my ETF is the most successful one? How do I make sure that my Bitcoin offering is the most successful one, right? And that's the question you should ask yourself, right? How are you going to stack? The winner is the person who stacks the most effectively. If you're going to contribute to Bitcoin, how are you going to create a Bitcoin product or service that respects the protocol that provides value to the billions of people that are going to want it? If you're offering a Bitcoin security or a Bitcoin financial product, how do you create the one that people are going to want? If you're analyzing Bitcoin or advocating or educating, the question is just how are you going to do that most coherently, most effectively? And I think that's the challenge that all of us face. If you stay focused on Bitcoin.
The fusion of Wall Street and Bitcoin marks an unprecedented era of financial transformation. While Bitcoin's price has seen its share of volatility, the convergence of pivotal events offers promise and potential for a new financial paradigm. This is more than a mere shift. It's a monumental transition that speaks to the growing recognition of Bitcoin's role as a treasury asset. Wall Street is awakening to the digital gold, and its embrace will be felt far and wide. As we wrap up this journey, remember that the lines between traditional finance and decentralized digital currencies are no longer distinct. The financial evolution we stand on the precipice of is set to shape the future of Bitcoin and the global financial landscape. For more insights and updates on the world of finance and the dynamic future of cryptocurrency, stay tuned.